I'm at the bank making money, making moves. Machines with tools and drills, making grooves. Missions impossible.
What is up, investors? Welcome back to In the Green with Charlie. Today, my guest is Invstr user WallStreet.G, who will be joining Invstr as a newsletter writer and Crunch podcast host. I chatted with him about his journey investing and his thoughts on the market. Here is our conversation. How you doing today, WallStreet.G?
I'm doing very well, man. How you doing, Charlie?
I'm very well myself. So could you just start by giving us a quick introduction to yourself?
All right, well, yeah, I'm WallStreet.G. I started this trading journey when I was like 13. Since then, it's been a rocky road, but I keep pushing, keep progressing. Started like sharing my journey, sharing my personality, who I am online recently, and I'm popping off a little bit, and it's a great time. You know, I'm enjoying building this community with these people, with all of y'all, and I'm excited to see what's to come.
So could you take us back to when you were 13 and talk about the beginning of your investing career?
All right, well, crazy story. Well, here, my dad passed away when I was super young. When I was like 13 years old, he passed away, and he was like the money maker of the household. He was really the guy who motivated me, really made me want to be like the best I can be. And when he passed, I became obsessed with like money and making money. I felt like I'm not safe, I guess. I wanted some type of stability, and I wanted to like get away from all the nonsense. And in my head, I was like, if I just had all this money, which may not be true, it's just, you know, it's a young boy mentality. I was like, if I had all this money, I could like control my life. I would have freedom with my time. And if I wanted to just sit around and mope around, I could. If I wanted to continue, I would just have that control. I would be able to decide what I wanted to do on a daily basis. So it's been a pursuit of mine ever since. I haven't stopped when I was in school, in high school and stuff like that, and in middle school, because I started in the 8th grade. I would spend my days in class on the markets, because that's when the markets were open. I would see what's going on. And after school, that's when I would get all my work done. And because I was able to actually get good grades and do my thing, teachers would let me do that. So, you know, you get what you're worth. You do your work, and people will recognize that, and you'll get that freedom to do things. So I learned that very young. It's been a serious journey, and I'm not close to where I want to be, but I'm excited. I'm all right. Like, I'm doing all right for my age now. I'm 21 now, so it's been 8 years, and it's a constant progression, you know,
I'm sorry to hear about your father's passing, but that's a really cool story. So could you take me into how successful you were as a 13-year-old investing in the market?
Not very. Like, it's an interesting story, because I started with a simulator account, just like Invstr is the app. The issue with it was that it was 15 minutes delayed from real time. So any type of like short-term trading, you were technically almost cheating when you would go look, you know what I mean? You'd have a 15-minute gap period, and if there's a big gap in price within that time, you can take advantage of a fluctuation that actually wasn't there. So you're cheating. So as a young kid, I realized like, hey, that's not what I want to be doing for one. I don't like the cheating concept. So I had to focus on longer term positions, and they give you $100,000 to trade with that account. I know with Invstr it's $1 million, but with them it was 100,000. And I started just trading, you know, bigger stocks, like just like the Apple, the Microsoft, just trying to like Google. Like I was just doing like the typical thinking I know what I'm doing type of mistakes, you know, and building a little portfolio. What I realized was that there was no volatility, especially when I started in the markets. There wasn't a lot of volatility. So that $100,000 wasn't fluctuating much. You know, there wasn't much action. I was doing okay, but like it wasn't what I dreamed trading to be. And it's not to say that, okay, you got to make 1,000% for it to be worth it. You know what I mean? That's kind of a ridiculous. It is an absolutely ridiculous thought process to have. But I wanted more than 1% a year. You know what I mean? Or 3% fluctuations a year. So I was trying to figure out how to do that. So that's how I started. And then it progressed as like literally I started learning absolutely everything about the markets that I could, from like penny stocks to trading the VIX to options to futures to different commodities, how those are priced out. And I was trying to just gain a macro point of view, a three-dimensional point of view on how the market actually works. And what I learned through that process is that everything is correlated in a way that is just it's scary. It's scary because of this globalized world and how everything's now connected. It's gotten to a point where everything is connected in a way. It's like it's beautiful, honestly, when you see how the S&P is correlated to the Dow and how gold is then correlated to such. Same with the VIX, and how global markets are correlated. Because one interesting fact is that the highest correlated stock to the S&P isn't even a U.S. stock. It's a stock in France. It's a French company. So you can sit there and be like, how does that make sense? Well, think about it and try to actually like rethink or rethink everything you've ever thought you knew about the markets, and actually check the data. And a lot of the things that you'll see will shock you. And that's one of the issues that I have with the internet and everything that's being pushed around, is because as somebody who went through everything you can find on the internet, I can tell you with certainty I use nothing of it. I use such a small percentage of what I learned. What I use it for at this point is to gauge where the dumb money is. That's the only reason why I use it. So it's been an interesting journey, but that's what I'm saying. It's a never-ending process of optimization and trying to learn more. But that's kind of my process as of right now. That's where I'm at.
So now focusing on your current strategy, how would you define your current strategy? What are some specific things you're focusing on?
One of, like, I guess the most like digestible concept for at least this interview would be like gaps, trading gaps. People don't understand the importance of these trading gaps, and they are very important. And I've been able to catch very, very strong trends and time and be able to predict, like in a broader sense, like in a range, at least where the trend will end, way before the trend has gotten there, like days, weeks before. And it's because some of these gaps are very important to where they are in the trend, or where the trend is in its growth. And you can actually use these gaps to measure where the trend is going and how strong the trend really is. And
so what is a trading gap for people who might not know?
okay, so a trading gap is, it's where, so with stocks at least, because this is the thing, and this trading gaps have become more and more prominent over time because of the fact that the markets have become so globalized. So overnight, when the US stock market is closed, Japan opens, and then there's the European market still trading, right? So because of that, there's still action 24 hours a day. So what ends up happening is when a stock's price from the day before it closed opens way higher or way lower from the closing price of the day before, that's the trading gap right there, right? So there's downwards gaps, there's upwards gaps, and if you some of them are like nonsense, where they don't actually mean anything for the trend, but some are very well placed, and on very, very strong trends, you can notice very distinct gaps over and over and over again that tell you something about where the trend may be, or where the trend may be going, or if it's completely done and it's exhausted.
And what are some of the ways you take advantage of trading gaps in the market?
So as you learn more about trading gaps, there have been a lot of studies on how these gaps behave. And right out the gate, one of the most like basic things that you'll learn about gaps is people say fade the gap. And what does that mean? Is that gaps usually fill. So wherever that gap is, it usually fills out. So let's say there's an upwards gap, shorting that gap makes sense because it'll usually end up back where that gap actually started. So that's just like a term that people throw around, is just fade the gap. And some of the strongest gaps that create the strongest trends are the gaps that don't fill. So those are the ones you actually want to look for.
And then could you break down just how you got into using Invstr?
Yeah, so Invstr was a company that I have seen on the App Store a lot, and I really like the idea that they gave you money, they gave you a chance to get paid out if you do well. So it just incentivizes you. Like if I was a kid at 13, like back, and I knew I had real-time data, and it would give me another reason to practice for longer time, because of the fact that hey, I got a chance to win. So I would be pushing for that. I'm very competitive as a person, so I really like the idea. And I like the idea that there's a way to build a community. You can talk to people. You know, trading's a very lonely thing. And that's something that I noticed growing up was I was like always like when I was doing this stuff, I was alone because I didn't know anybody who traded like that. So I was literally just I had to like buffer myself. I had to figure out what I was doing wrong as I was going. And it would have been definitely amazing to just chat with other people, learn from other people's mistakes. Like, of course, I would do that through interviews or learning about different of these billionaire investors who like run their hedge funds and learn as much as I can about them and their journey. But having like a one-on-one personal interaction is also like, you know, it's unmatched. So I'm definitely I like the app. I like the app a lot, and I'm gonna continue to use it and send a lot of my people to this app so that we can chat about the markets there. You know, it's fun to chat about the markets on TikTok and Instagram, but like this is an app for that. Like let's actually like break down things together. Like you can't do that on Instagram or TikTok. You know, we can chat about it. We can have like general conversations, but if we want to talk like real investing strategies and really do the real work, like that, Invstr is the place to do it.
Yeah, definitely one of the coolest things is this concept of you're not investing alone. You have this community.
Mm-hmm.
So on that note, what do you think traders should focus on the most?
See, traders, so this is the big thing. For one, there's a difference between a trader and an investor. So investors, you know, longer term horizon, they're probably preaching Warren Buffett all the time. And I mess with those people, no issue with those people, keep doing their thing. But for traders, people want to be more active with their money. Those people need to understand that their own psychology and them as a human, they suck. And we all suck. Like we're actually terrible. Like we don't understand anything, and we have a lot of what's called cognitive biases. So understanding behavioral finance, and behavioral finance was founded by Daniel Kahneman and Amos Tversky. Those are the two guys that I would preach if I was a trader. Well, I am a trader, and those are the people that I am preaching, and I'm currently preaching right now, is you have to go look up Daniel Kahneman, Amos Tversky, and see what they offered as for prospect theory and the different cognitive biases that us as traders and humans we have when we take risks with our money. We don't even recognize it. We don't realize it. But once you start reading these biases, you're going to be like, oh my God, I do that all the time. Oh my God, that's me. Like, and you start realizing to what extent we're naturally born to lose money. Like, that's literally what it is. There's a reason why most traders lose. It's a sad fact, but it's true, you know? And it's because they don't understand their own psychology, number one. Number two is you want to have a clear-cut system. But this is why I'm saying the behavioral finance is even more important, because I could hand you the best and most profitable system on planet Earth, like the Holy Grail. You know what I mean? It's not a thing, but like I'll hand you the Holy Grail, and if you do not understand what the mistakes you make when you're risking your money, you're not even going to be able to trade it successfully, and you're still going to lose money because you're either going to trade too big, you're not going to cut your losses like quick enough, and you're just going to do some nonsense with your money because you're too greedy or whatever. So these different biases, everybody needs to know them, and that's why you lose when you go gambling. That's why gambling, you know, it's another conversation, but like that's why you lose most times when you are risking your own real money. It's an interesting concept, but look into these guys. That's what I'd say to everybody. Look into Daniel Kahneman and Amos Tversky.
Interesting. I'll definitely check him out. One thing I noticed in your videos that you wear some sunglasses inside. Could you explain why you do this?
I wear the sunglasses inside because the future is just so bright, man. The future is just so bright. So you gotta wear the shades, man. You gotta wear the shades. I'm telling you. It's hard to see. But I'm excited and I keep pushing. So sometimes I take them off, but only to sleep. You know, that's all it is.
I love the mindset. I love it. So moving on, you're going to start co-hosting the Invstr Crunch podcast. Could you explain what made you want to get involved with it and why you're excited about it?
Yo, I love the idea. I think that a lot of the like finance news that you see online is is honestly like dreary and boring. You want to yawn when you're listening to these monotone people talking about what's going on. Like I'm juiced up about when I read these things. Like I get juiced up. I love it. I love the idea of money and business and these big ideas that are going on in the world. So that stuff gets me excited. I don't understand why these people aren't excited. So I wanna like share my voice, show them, like get people into it. Like why does it have to be boring? Why are we talking about big numbers? We're talking about making millions of dollars, and you're telling me you're gonna talk like this? Like I don't understand why, Like it's a mess to me. So that's why I'm excited to do it. Is I think that I'll make it exciting, man. Like you're gonna want to listen because hey, it's gonna keep you involved and you're learning and you know what's up. You're up to date. You're doing your thing, and that's what matters the most. That's what matters the most. So yeah, I don't know. I'm tired of this. Like trying to make it sound so like regular or not so serious and like nonsense when it's like, yo, you can have a little bit of fun with it. Like you can have a little bit of fun with it. And what's the point of life? Like you gotta laugh, you gotta smile, you gotta enjoy. So why not put a little bit of that into this big world of finance? Why not?
I totally agree. I love it. So do you have any final thoughts for the investor community?
If you're young and you're thinking about finance, take math seriously because you're going to use it at some point, especially where this world is going with coding and tech. You need math and probably learn how to code as well, so you can start coding your systems and actually doing a proper back test to test how the validity of your own systems and being able to properly optimize them with different processes. That's the big thing. It's like, don't stop until you got a PhD in quantitative finance and you're running an $100 million hedge fund. Don't stop. Just don't stop. You're good. Just keep doing your thing. Just day by day, but don't stop.
Awesome. Well, thank you for coming on the podcast today.
Good stuff. No problem. It was my pleasure.
Making moves, machines with tools and drills, making grooves, missions impossible.
I am not a financial advisor, and my comments should never be taken as financial advice. Investments come with risk, so always do your research and analysis beforehand.